We can kick off. So firstly, I just want to thank everyone for who's attending, for joining us today, whilst we talk about benchmarking performance in turbulent times. Next slide, please. So just a reminder, there is a Q&A at the bottom here, and all questions will be answered at the end. So please do type in your questions as we go through, and we will answer those when we finish the presentation. Next slide. So just to give you an overview of the agenda, first thing we're going to talk about is why is it important to benchmark in why is benchmarking critical in these turbulent times? It's not only important just to understand how you're performing, but you want to understand how your competitors are performing in relativity to yourself as well. So if everyone is declining at 30% and you're declining at 10% or growing at 5%, you're doing great. Then we're going to come on to discussing using data and Similarweb data through the investor's lens. So I'm not sure how many of you are aware of this tool, but the same data that you're using every day, so the Similarweb data or other data sets, investors are using these data sets to evaluate companies as well. And they're trying to get ahead of what management are reporting and trying to get a view on companies which isn't actually publicly available through what is traditionally reported. And then finally, we're going to provide you some tips on how you can benchmark and we'll help you report more efficient growth in a bear market as well. So we're going to help you show how well that you're performing, and also to your investors who are using this data as well, to make you guys really, really shine. Next slide. So I just want to say we're very, very happy to have John join us today. So John is an SVP of Equity Research, covering the software and the internet space at Jefferies. Jefferies is a leading US investment bank. So John, thank you very, very much for joining us here today. He'll be part of the Q&A and answering many of the questions that we come through this presentation. And next slide, please. And also very, very happy to have one and only Marta, who is our VP of Digital Research Intelligence, who will also be presenting the first section and taking questions at the end as well. And I will be moderating. I'm VP of Investor Intelligence here at Similarweb. So Marta, I'm going to hand the reins over to you.
Many thanks, Ed. Happy to see you here. Starting with the explaining what we mean by the benchmarking, and also underlining why it's critical in turbulent times. I'd already mentioned at the beginning, but I think it's going to be more easy to spot the difference when I just give you one example. So if you think about a company performance in terms of, in this particular case, visits quarter over quarter, we just take the example of Airbnb, you can see some numbers. You can see that there is a -6% Q3 versus Q2, and there is +6% when you compare it to the previous year. And this number is not so much meaningful without a context, without knowing that the entire travel sector is actually performing the same. So this is a pure seasonality, but the Airbnb year over year is actually growing not at the speed of the travel sector, which grew up by 8%. So this is already something more meaningful. And it's getting the full picture when you compare it with the specific competitors. You can see what's actually the market share of Airbnb. You can also spot that there is one competitor which is performing in particular well, with +2% quarter over quarter, despite of the seasonal decrease, and amazing +18% year over year. So that is this context which market intelligence data can give you, which actually, tell you where you really are with your digital performance. And how do companies use this type of data today? So basically, of course, many of the companies would simply use it in the internal reporting. Of course, all the public companies also report it during the earning calls, and you can have just two examples, like a TripAdvisor, CarGurus last releases using also Similarweb data to say that they are the biggest. So this is usually the most important, and something companies are in particular proud of, that they are the leading platform in the travel industry, that they are the leading most visited automotive shopping website in the US. It's once per quarter, and it's limiting actually to the users or to the visits. And we believe there is much more to discover when you just go into the more granularity and the higher frequency, because investors are using the data just with a higher granularity and near real time. Ed, I'm handing over to you.
Yes, that's definitely true. So I think there's a lot more in the data that investors are kind of paying attention to. If you go into the next slide. So there's a recent industry that has kind of opened up in the investment world in the past 3 or 4 years called alternative data. Now, alternative data to most companies is just regular data. Investors call it alternative because it's new to them. It's non-traditional financial data. And why are investors using this kind of data? It's because it's much more granular than what companies report themselves. So in the example of Similarweb, you can see visits, you can see number of conversions, you can see brand awareness. Companies do not report this at all. So investors are getting a view into companies beyond what is being reported. And then also, because this data or similar data is updated on a daily basis versus financial reports, which are from public companies, which are updated maybe once a quarter, or even with private companies once a year, if at all, investors can actually get a real-time view of how companies are performing. Now, this is the same data that Similarweb provides to corporate customers, whether it be marketing teams, research teams. Investors are using the same information to get this granular real-time view on how companies are performing. And I think a lot of the time, companies aren't necessarily aware that investors are using this information. So how are they using this data to evaluate and invest in companies? And John is going to go into a bit more detail on this, and he can explain, but 1 second before we dive in. But a kind of a key couple of ways that they do it is, one, using the data to forecast how companies are going to perform. And this is beyond what is reported in financial reports. And then also to understand things that maybe the company isn't fully aware of, or maybe the company isn't fully reporting, but understanding things like market share, who's the winner and loser in a category, who's the best, who's the worst, how loyal are audiences as well, how effective are marketing strategies. And all this kind of information investors are using to basically preempt what the company is reporting, but also when they speak to the C-suite of companies, just to be armed with the right questions as well. So without further ado, I do really want to hear from John. So John, we have a few quite a few questions for you. So just how are you using Similarweb? So maybe you could give a bit of context as to what you do, the kind of work that you do, and how you're incorporating Similarweb data into that.
Sure. So, and thanks for having me here, Ed and Marta. It's great to be able to share our story. So, we're at Jefferies. It's a global investment bank, and I'm in the equity research department. So we cover, public companies in the internet and software sector. We write research reports. We dig in. We look up information. We forecast how companies will do and model them. And our clients are investors, so professional investors, money managers, analysts at those firms. And it's our job to serve them with the best information regarding their investments in companies and how well they're doing and what their prospects are. In terms of how we're using Similarweb, Similarweb is I would say we've always used what we call primary research or often real-time research. And in the past, it might have meant, walking around to a store to see how traffic is, or doing surveys. Very time consuming and expensive, but now we have all these digital tools, and Similarweb is probably one of the best that we've come across. So we do use it regularly to track traffic, users. We look for inflection points, and then we try to correlate that to primarily the revenue trends for the companies that we follow. And oftentimes it can give us early insights in terms of maybe directional change, and how things might deviate from what the consensus view is of how the company is expected to do in a certain quarter or year. And I can dig in as well if you'd like.
Definitely, I've got many more questions on this. So I guess just going back, like, what was the catalyst that you made you look into Similarweb originally? Why was it important for you to take on a data set like Similarweb's? And how long have you been using Similarweb for?
Yeah, so our sector coverage is software and internet, and obviously with internet, everything is online, everything is digital. So the digital data has become very, very important. And so, we learned about Similarweb many years ago, and I think we probably started to use it, not sure the exact time frame, but at least 2 to 3 years, I would say. I mean, it's been so ingrained in our regular research processes that hard to tell what the exact time is when we started. But everything being digital, whether it's an internet marketplace, whether it's Amazon, Google, or Uber, or even Airbnb, and all those, everything can be observed online. And Similarweb, is one of the few places that tracks and monitors and gathers all this information online. And so it's very easy to use. That's why we're probably using it more and more, because the power of the data is very accessible to us. I think initially when we looked at many different data sources, what you had to do, you had to get a huge amount of big data, maybe have some people with data science skills on our team and process it and try to come up with trends or analysis. But a lot of that is made easy by the user interface of the Similarweb solution. And I think that's why we're probably using it more and more. It's just so easy to kind of play around and put in different filters and drill down and look for information.
Got it. And I think that point about not needing to be a data scientist. So we do work with many funds as well. And some of these funds have very, very big data science teams, and they're used to processing very, very big data sets. But I definitely do think there is something within Similarweb that it's much easier to find the signal that you're looking for. Can you potentially also give some examples? Just you mentioned about correlating data against reported numbers. Can you just give maybe a few more examples of how you're using that? And also just maybe a bit more about the correlation process as well.
Yeah. So, we do use it regularly for our earnings previews for every quarter. We're trying to figure out how the companies will do. We've used it on a regular basis we try to use across most of the companies in our coverage. But in my specific area, we've used it for Uber versus Lyft to see how, the number of riders are trending, how much usage there is, whether, things are picking up because the cities are reopening after COVID. So we look for the trends either in overall web traffic or, MAUs, monthly active users. And we can drill down by specific regions. Since Lyft is primarily in the US, for Uber, we would also restrict it just to the US view and then compare them side by side and to see, how they're doing. In the latest quarter, actually, we were able to see that, the user activity was not growing as fast or not rebounding as fast for Lyft. So we were probably not as positive in terms of the recovery trends, and it ended up being what they reported. Actually, Lyft ended up reporting that they had lost about 1 point of market share. And so we do similar things, over companies like GoDaddy and Wix, which are website builders. So very important for them to onboard new users every single month or quarter. So we will look at the growth trends in terms of traffic overall. So yeah, many different ways, but primarily I would say we will look at overall web traffic or user activity.
Interesting. And you guys provide advice to your clients whether they should be buying, holding, or selling a stock. That's correct.
that is one of the outputs of our recommendation, of our research is recommendation on what to do about the stock, as well as forecasting what we think are the revenue growth in trends going forward.
And interesting. And have your team ever changed the recommendation based on Similarweb's data? I mean, like the Uber and Lyft example, have you used Similarweb data to change whether your recommendation on like the quality of a stock and its growth potential?
I think it's definitely an important component that we've used when we do make rating changes. Probably not within the last few months, but we have done that in the past. So when we build a case, obviously we have to look at many different things and build a picture. It's what we call a mosaic. We need to have different data points from, unique proprietary data, such as from Similarweb, as well as other things that we pick up across the industry from our own research. And all that comes in to build a full picture of where we think the direction is, whether it's up or down. So it is an important component. It's an important evidence, and we will highlight it on the cover of our research. Depending on what the trend says. If the data says gives a big warning flag, it'll definitely be highlighted there prominently.
Interesting. So I think one of the things, so Jefferies being a very prominent bank, and I think quite often when you change your rating on a company, that can have an impact on the stock price as well. So would it be fair to say that the combination of all these data sets as well does impact the market sentiment on these stocks as well, and therefore the price?
Yeah, of course. I think if there's kind of mounting evidence based on the different cuts of the data, obviously we will also download the data into Excel and then do our own analysis, build our own charts. And again, it is not the only component, right? I mean, it's one of the many evidence that we'll use, but it's important. And so it is also very visual, so it can definitely make an impression to our investors and to anyone that reads our research. And so it can have a big impact, along with the rest of the arguments that might be in that report.
Very interesting. Very interesting. So, I would say that's very, and I think with data in general, investors are using data sets like Similarweb and other data sets so much as well, that these data sets are now being priced into the valuation of companies as well. So I think it's important for even the corporates here who are listening to understand that this data does actually have implications on just market valuation as well. So John, another kind of question as well. How frequently do you use Similarweb data? Do you use it once a quarter? Are you using it more frequently? How often do you use it?
Yeah, we do use it on a very regular basis. The full data set gets updated monthly, so we're always looking for that either the 7th or the 8th of the month. Whenever the new data comes out, we'll be on it, going to the website, downloading the latest data, and then updating our charts and analysis. But also, we get inquiries, every once in a while where we need to check, how things are going in between those monthly updates. And since there is, as you mentioned, daily updates or real-time update, we will go and look at the cut of the screen that shows the trailing 28 days. So it's always often a quick check to see how things are going intra-month, let's say. So it does become a part of our daily or weekly routine. So, I would say it's more frequent than once a quarter, at least once a month, if not more often, just to see how things are going real time.
Interesting. And do the C-level of companies, do the management of companies realize that you're using this data to evaluate them, or that their own investors are using Similarweb data to evaluate them as well?
Yeah, I think that's they're starting to become more and more aware. I don't think they're quite as fully aware yet, but we've been a user for a while. I think other analysts are starting to use it more, and as our investor clients see it in our reports, I think more and more of them are actually using it. In our conversations with them, they mentioned they also look at the data, so they have obviously access to it, so we can have discussions around how to interpret the data and what we both see. So I think it is coming up more in conversations. I think the management team are becoming more and more aware, especially when it is an impactful research that may be market moving or changing recommendation. So it's definitely coming up on the radar more and more as the usage become more widespread.
And I guess, like, why do you think it's, in your opinion, important for management to have a much better understanding on how investors are using this kind of data?
Yeah, I mean, obviously, I think the management team, attend investor conferences. They have individual meetings or calls. So I think this topic probably will come up, and so I think it's probably important for them to be prepared to answer questions and maybe explain what their view is relative to the data. If there's some nuances to it that they need to explain. So I think it makes them much more informed and be prepared. When their investors are asking questions directly to them. So you don't want to be blindsided when someone shows up with data or a chart, and you want to have a good answer prepared.
I definitely agree, and I think as more and more investors are using this, they're coming more armed with better questions to the management team. And I think another point I think you just touched on as well. It's also down to the interpretation of data. You don't want your investors interpreting data in the incorrect way and making the wrong assessment of the company. We've definitely seen this before with certain companies where investors interpreted the data incorrectly and made a bad judgment on it. So I think it's important, as you mentioned, for management to educate their investors on what they should actually be looking at as well. And I know, I don't know whether you used it before, but I know Jefferies before have used Comscore before in the past. Why did you transition away from Comscore onto Similarweb?
Yeah, and so I haven't personally used it, but obviously I'm aware of it. It was a very, very popular tool. It seems like it's quite a while ago. I think the feedback that I've gotten is that it wasn't quite as granular, and the view of what it looks at is very, very limited. Obviously, these days, you want to see not just desktop web browsing, but also mobile, and then you want to see app data. And it's best if it's all in one place so that you don't have to jump around to different solutions and try to, combine all the data into a single view. So I think, it's probably been, I would say, more than 5 years since we've used Comscore. And this we've talked to other customers as well in companies, and this seems to be the same feedback that we've gotten.
Got it. So no longer the market staple as it used to be.
Yeah, great. I don't think it's really, we haven't mentioned or written about it, so I don't hear many investors using it either anymore.
Great. I definitely do want to carry on talking about some of the topics that we want to discuss, and particularly about the I guess the turbulent times that we're going through at the moment. We're about to enter a recession, and the way that investors are looking at the world is obviously changing. We've been in a boom for the past 18 months. That's changing. Interest rates are going up. I wouldn't say the world is imploding as much as it was in the beginning of 2020, at the beginning of COVID, but it's not such a rosy horizon. I guess, like, with all the dynamics changing in the market, what are you looking for in companies, and how are you using Similarweb data to track that?
Yeah, so I think what we found one of the greatest values with Similarweb data is what it can tell directionally. When things are changing, whether it's up or down, we would try to cut the data in different ways, looking at the absolute levels as well as growth rates, and maybe we could take a second derivative to see if there's deceleration, acceleration. And that's applicable both in a bull market and bear market. We want to see if there's inflection up. In a bear market, we want to see if there is sudden drop off in traffic or usage or time spent per user and those things, because those can be very telling in terms of how users are using the company's products, which can translate into revenue ultimately. So we want to get those early signals. So in a bear market, what we will look for is those trends to see after a declining trend, when are things starting to stabilize, and then finding a floor. And if there, once there is a floor, we would also ultimately want to see, when is there a change in direction upward and when the recovery is starting. So those signals usually are very, very small, and we want to see that early. Obviously before the economic data comes out and GDP data comes out, which is too late by the time everyone knows what the results are. So that's what we look for: directional changes and small differences they would notice early on.
Got it. And I guess that goes back to the point that this data is real-time data, and it's released way in advance as official reports, as you said, economic data, and then even earnings data as well. So you can actually see that point in time where you see that inflection. And are you just looking at direct? You mentioned earlier you were looking at elements like time spent as well. How do you see that as an indicator of company performance? Yeah.
Yeah, I mean, we definitely use traffic and user. And I think time spent probably can point to the stickiness of that usage, right? I mean, you don't want users coming to a company's website and then spend like 30 seconds and then jump off to somewhere else. You probably want them to see they're looking around, doing research or shopping. So if you have a good amount of users times the time spent, and then you can calculate the overall usage, that can be an important signal. Same thing, especially when it comes to mobile apps. If you can get that information, I think it's important. I think, there's probably more that we could do since, the depth of Similarweb data, it's pretty deep, and there's many ways to cut through the information. So I think, we're still learning. We're trying to do more. I mean, obviously, everyone starts off with traffic and users, but I think there's more layers that can be explored, and there can be a lot of value that we could unearth from there. We're always looking to get more historical data so we can be longer time series, as well as different cuts by geography, as well as in different aspects of that data to make our research better.
Got it. And are you looking at all into kind of like brand strength at all with the data, whether it be like where the traffic is coming from to a website? And are you using that as a way to understand what might be the companies that get out of this bear market maybe a little bit more unscathed?
Yeah, I mean, I think we probably could do more there, especially in this kind of environment. I mean, our view is that higher quality companies tend to have, obviously a little more loyal users, more stickier usage. And oftentimes when, let's say when people are cutting back, they will try to consolidate, their time spent or where they spend their money with who they trust, which means, probably the brands that they trust. So as evidence for that, we would probably will be important to see, in terms of the data and the time spent again, to see that those users are sticky. And maybe overall traffic comes down a little bit, but it's holding up better, especially compared to, competitors that have weaker brands. And you should be able to see that, I think, by seeing how sticky it is and how much time is being spent, how loyal those users are.
Great. It's interesting. And there's other metrics that Similarweb provides, such as like new returning users as a way to understand the stickiness and loyalty of a company as well. And also visits per user as well would be another way. And interesting. I guess got one final question. So as the tech industry in general is having a bit of a repositioning from hypergrowth, charging after hypergrowth, to now going after profitability. Is there any way that you can measure elements of that with Similarweb data or any other data sets, maybe in terms of kind of spending data or just general performance data?
Yeah, and I've become aware of the spending data, and especially on the advertising side that's available. I'm not sure if we have access to it. It might be something that we need to talk to your team offline to see whether you can get access. Increase our relationship with you guys. But I think that will be important data because in a downturn, many of our companies talk about adjusting their marketing spend, especially maybe reducing brand spend or maybe optimizing their performance marketing spend. And it looks like this data would be able to tell us in real time, very early on, whether those shifts are being made. If they're being made intelligently and the conversion rates still are holding up, and they're still getting a good amount of traffic at a lower cost, I think that would be a good signal, because they would say would tell us that they're being very efficient, much more efficient with their spend. So, they might provide upside to the margin and still have, customer business and revenues hold up a little bit better than otherwise. So I think that will be important, and there will be a way for us to check or to see ahead of time if there's some significant cost saving measures that are being put together before those announcements come, maybe 3-4 weeks after the quarter is over.
Very interesting, very interesting. And I think maybe one point also to kind of clarify, emphasize in this, during different economic times and periods, investors are looking at different signals on companies. So like right now, as you mentioned, they're looking to see when the bottom of the market is, and maybe looking at efficiencies. Whereas 12 months ago, it was looking at relative growth as well. Would that be a fair assessment?
Oh yeah, for sure. I mean, the investor debate's always changed. Obviously, we're always interested in growth, but in a downturn, we're looking for more protection. We want companies that are able to withstand any shocks and hold up better. Obviously, cost control is very, very important. And during the market, as the downturn started, there was a big focus on companies that are able to reduce losses or generate significant cash flows. And if companies announced significant cost-saving initiatives, that was usually received very well, even if there is a hit to the top line. Obviously, everyone understands micro hits everyone, but if you can control what you can control better, such as spending, that's important. So those investor debates always change, and even in somewhat more steady times, there may be questions specific to, let's say, a certain product line of a company. Or certain geography, something going really, really well in Asia or in the UK, we will be able to dig in using our Similarweb data to kind of narrow down what those data sets are and get a much more focused picture. So we definitely appreciate that flexibility.
Great. Well, John, just first of all, thank you very, very much for all these questions. It's been very, very, very interesting. And if there's, I know we've had a couple of questions come in through the Q&A. We'll get to them at the end, but please do fire more questions away, particularly for John as well. So that's been really interesting understanding how investors have been using the data. Marta, how can corporates take these insights and put it into practice to use for themselves as well?
And many thanks, Ed. That was indeed amazing story, John. Many thanks for that. We thought we will summarize it, giving some practical examples, but also some tips how it can be done. So first of all, we would like to encourage everybody to just think about what to do with the benchmarking, how you can actually redefine it, going more, beyond the users, beyond the visits, and use really the benefit of the super granular data we can provide you. And then there are just three, in theory, simple steps, starting with the first one, just linking the business KPI to the passive data, which, as you already heard, are very much correlated with the business performance. Of course, each business model would have slightly different indicators. So it's best to start just with looking at your particular performance with your own numbers, find the correlations, being just inspired by how investors are doing that. Once you find it, you can look with the same criteria for your competitors and for the entire market sector. And this way you can uncover the full story of competitors' performance and think about the storytelling, because in the end of the day, the investors' relations is also about the storytelling. Of course, there is full transparency. As you know, they are using our data, so nothing can be really hidden, but placing it in the correct context always can help. And in the end of the day, the third step, the third advice would just to be agile and open-minded, because, the only thing we can be sure Nowadays, that is a constant change. The times are turbulent, never mind if it's a recession or if it's COVID, or we actually don't know what's going to happen next year. Each year is bringing like new surprises. So basically, the KPIs might change. And if last year we were all about the growth, right now we are under the pressure of being profitable and super, super efficient. So we should just be open to changing the KPIs. And fortunately, the flexibility of our data is also open to that. But bringing it into the practice. So just for the travel sector we've been speaking about, there would be some like a specific correlations. In general, in the turbulent times, you should think about the brand strength, you should think about the cost efficiency, and you should think about the monetization efficiency and how you can link it with our data. Just looking at this particular travel sector example, which is, I think, quite scalable to any business with a transactional business model. So first, the brand strength can be perfectly linked with the branded keyword search volume. There is a correlation. Also, the organic traffic is a good indicator. Exclusivity and loyalty of the audience is like a super important part that was also being mentioned by John, but also the high app adoption is meaningful as, the app is also, increasing the engagement and the loyalty of the audience. So this is all, these are all the indicators of the strong brand. On the cost efficiency, what you can check is the cost of the traffic acquisition. It's a great indicator. You also can think about the efficiency in the context of the bounce rate of the visitors' loyalty. So just in the context if your marketing investments are not wasted. On the other end, the very important point about the monetization. So like each visit or audience, customers base growth is warmly welcome. But of course, in the end of the day, what really matters is the business performance and the revenue, and the conversion rate. It's bringing us much closer to the company's revenues. Also, converted visits volumes would be speaking a lot about it. Checkout pages, or for the subscription model, it would be subscriptions and cancellations. For any e-commerce, it would be just the checkout pages, because we can go to this level of granularity with Similarweb data would be the great indicator. And I will switch right now to the very, very practical example. We have been using our Similarweb data from the travel sector, from the US. Of course, there is like a great global coverage, so you can compare geographies. However, just focusing right now on the US market, so the brand strength, you can see the correlation between the direct traffic volume and the branded search volume, and the Airbnb is demonstrating a perfect brand strength. Actually, if you draw the line here, you can see how it's correlated. So the direct traffic volume and the branded searches are super correlated with each other. The only exception would be Booking.com. It's always a problem when the name of the company is also meaning something in a common language, but for any like a specific company names like Airbnb, Expedia, Vrbo, you can see this obvious correlation. Another example is the app adoption. So app adoption is also a strong indicator of how strong the brand is, how engaged are the users, and we can see that Airbnb is actually perfectly using the opportunity that engaging with the users through app can bring. You can see the app's monthly active users versus the visits on the website, visitors of the websites. It's actually the highest for Airbnb, and it's outperforming. It's much better than any of the competitors here. We are relying on the app data from both iOS and Android here. And then when you want to translate it into the good storytelling, Also keeping in mind the current investors' mindset. Of course, the best story would be that investors see strong brands as crisis resistant, and this is why Airbnb numbers are positioning them so well. We could learn from the Wall Street Journal article published several weeks ago that actually Airbnb shifted their marketing investment already some time ago into the brand building. They actually decided to limit their search investments, the pay-per-click investment, and they shifted the money into the brand building, into PR, etc. They wanted to get their brand much stronger. You can also see the effects of that because they just got this year to the best global brand ranking, so the brands with the highest value. They are totally new here. You can see they are next to brands like Porsche or Siemens with such a great tradition. Airbnb, everybody knows, is quite a fresh company on the market, and this is just amazing. They managed to do it. And we, of course, see the correlation with the data, and the perfect story we could say is the Airbnb is 4 times stronger than a direct competitor with a similar business model, Vrbo, and twice stronger than Expedia when it comes to the branded keywords. When it comes to the direct traffic, it's also 3 times stronger than direct competitor Vrbo, and 50% stronger than the fastest growing Booking.com. So this is all what you can see out of the data, and this is the story you can share. Another example would be on the efficiency, cost and monetization efficiency. So in this particular case, you can see Airbnb actually had the lowest PPC spend in the entire travel sector. It's very much in line with what was presented a slide earlier. So once you have a strong brand, you don't need to spend so much on the pay-per-click. You don't need to spend so much on the traffic acquisition, and you can benefit from relatively low spend with the cost efficiency pressure and still achieve a good result on the market average when it comes to the seasonality and quite a nice growth year over year. The same story with the monetization efficiency. So basically what we are looking at here is the conversion rate. So how well Airbnb versus competitors is converting the visits. So only the growth of the visits is not revealing the full story. The full story is when you're just looking that this quarter, Q3 this year, actually Airbnb converted 10% more visits than a year before. This is absolutely great achievement. Of course, some companies are doing it better, but Airbnb directly should be rather compared to Vrbo, which is a company with a similar business model. So it's not only clients who want to book the stay who are visiting, but there are also the hosts, right? So it's natural that the visits conversion wouldn't be at the conversion rate wouldn't be at the same level as, for instance, hotels.com, booking.com, or the Expedia, but it's still at a great achievement and amazing growth year over year. And then again, it kind of fit perfectly into the story because investors warmly welcome expense discipline, cost efficiency right now. You can read it in the Airbnb public statements that they are very proud of this discipline in managing the cost structure. You can also read it in the Jefferies report. They appreciate a lot the expense discipline, and it helped actually Airbnb to deliver impressive EBITDA upside. And you can also read it in the article at the Wall Street Journal that thanks to the strong brand, their marketing spending is now low enough that, you know, even in turbulent times, they really can do relatively well. And this is very much correlated to our numbers, both on the PPC spend, which is the lowest in the category, at the same time with such a great conversion rate, which is 3 times higher than direct competitor, and the converted visits that are twice higher than the industry average. So this is just the example of the insights. Of course, each market sector would have, and each business model would have slightly different KPIs. We haven't even touched, like a small portion of that. For the CPG, you would look also at the on-site search, at the marketplaces. For the companies which are monetizing the time spent with the advertising models, you would see at the time spent, but also the advertising booking sections of the website. Companies who are monetizing the subscription model, you would be looking at the subscription cancellation. There are many things many insights we could bring that are very, very close to the business results of the companies. And we are happy to schedule a meeting with anybody who would like to learn more. And just like a very, very last notice on that, if you're not our client yet, we have a special migration program. If you're migrating from Comsco, you can benefit from our granular and fresh reporting and reduce your spend. I think it's in particular a nice message in the times when the cost efficiency is pressing us all, and we need to do more with less nowadays. That's everything from my end. Ed, I'm handing over to you to manage the Q&A session.
Brilliant. Oh, that's very, very interesting, Marta. Thank you. And yeah, please keep the Q&A coming. We have a few questions, and I'm going to probably ping back the A to both of you. So the first question that we have, what sectors or company sizes does Similarweb have limited data on? So John, it'd be great to hear from you from an investor perspective, what sectors you're using Similarweb to evaluate.
Yeah, I mean, so as I mentioned, we cover all of software and internet. We use a lot of Similarweb data, especially on the internet side, across all the different subsectors, whether it's travel, automotive, retail, website building. We've actually been able to go down pretty low, even some smaller companies. I mean, I'm looking at one of our recent research that's in the auto space, and we're looking at somewhat smaller market cap companies these days, like TrueCar, obviously the big online players, but even in real estate, Redfin, Realtor.com, Zillow, I mean, and some of the newer startups, OfferPad and OpenDoor, I mean, they're public companies, but Ed can probably talk more about what's included, but our understanding is that, Similarweb does monitor the entire internet. So as long as there's traffic there, I think it'll show up. So maybe I'll hand it back to you.
Interesting. I think I might also just pass the baton on to Marta. Just I guess what industries are using our data?
So basically, there are actually clients across all the industries. Of course, we have many companies which we call like a transactional business model. So any companies that are based on the transactions online, but there is of course much more than that. There are CPG companies. We are proud to have many of the best global brands with us, like Nestle, for instance. There are also many companies from the financial sector, of course, investors, that's what we already know, and lots of other industries, B2B, and definitely not only digital natives. However, of course, with the digital natives companies, we just it's more natural to use our data. When it comes to the companies which are more traditional in the process of digital transformation, they are also often using the support of our advisory services team just to advise how to also translate this passively collected data to the business KPIs.
Interesting. I guess it's important to, yeah. Sorry, John.
Yeah. Add a little bit more, since the question was, it seems like it's asking also about, how small can you go with Similarweb? I mean, how small the company? Is there a limit to the size of the sector? And as I said, we haven't found really any constraints in our work. We also talk to customers, and we've run across companies that you would consider them to be SMBs. Maybe they have 100 employees or less. And their traffic shows up, and you can compare their traffic against much larger companies. So it's not just public companies that we monitor. We also look at private company competitors that may be much smaller. But sorry, back to you, Ed.
Interesting. No, and I think maybe just something to add to that as well. So we track about 15 million companies in our database, and we even have a product and a solution which helps sales teams find companies to work with and partner with as well, which is one of our big B2B use cases. And then also we have VC fund, venture capital funds using our data to find new opportunities, and they're looking for tiny companies, the next Facebooks. So second question as well, and I think, John, this is probably more of a question to you. How do you overcome disparities from third-party data like Similarweb with first-party data from the management team?
Yeah, and I think for us, the important thing is that we have, we often rely on more than one source of data. Obviously, Similarweb is an important component of our research, but we also will look at other sources. We will run survey data as well. We'll do online surveys. We also talk to, customers, industry experts. So that's why, it comes back to the idea of building a mosaic, building a full picture that, that approximate as closely as possible what's really going on with the company management team. So clearly there can be disparities. I think we just need to be aware when we look at the data. We need to be aware of how the company is structured and what business line it operates in, how it operates offline or online. And when you make that interpretation, you have to fit what does similar data, where does it fit in, and what part of the story does it correlate with. And then supplement the other parts, with other parts of the data. So, with any data, it's hard to have 100% accuracy. You want the best signal possible, but obviously, nothing is perfect in life. I mean, nothing's certain other than tax and death, right? So, yeah, it's an important tool, and we supplement it with others.
Interesting. So there's a lot of curation that needs to get there to match what the management is saying.
Yeah,
and then I guess,
sorry, I was going to say then when we look at the data, we do kind of do some testing. I don't know whether you call it back testing. We do some correlation testing. We'll build a chart and run the numbers, a time series, and then compare it to either a revenue trend or a specific metric of the company. Maybe it's not total revenue, or maybe it's just one segment. Maybe it's a booking trend, or maybe some other operational metric that they disclose. And then we'll see if there's a good fit there or not. And then if there is a good fit, then we'll start using Similarweb data on a regular basis and rely on it more.
And maybe let me add one point to that. The discrepancies or the differences between the third-party data and the first-party data. So basically, the first-party data from the direct measurement that the management has, as well as their own, data on the business performance revenue, is always the highest quality data, and there are no doubts about it. However, whenever you're analyzing or verifying the data quality from any market intelligence partner, the most important thing to look at is the so-called trend accuracy and the ratios or proportions accuracy. So scale accuracy, so how close it is to the absolute numbers, doesn't play such a big role. Much more important is how accurate data are in terms of showing trends and showing the proportions. So whenever a company has in their portfolio at least 2 websites, 2 brands, 2 apps, whatever, then it can be just like the proportions can be verified by just comparing how well this the market shares between these 2 are divided. Of course, the trend line can be verified by the company even if there is only 1 brand in the portfolio. So just looking how accurately we are showing the quarter over quarter, year over year, or month over month increases and decreases. And each time whenever our own performance is being reported, it's, the best thing is to use own numbers. And this is also what you can observe in the earnings calls. Usually companies are quoting their own Google Analytics or Adobe Analytics for their exact numbers, but then they are saying they are number 1, they are twice bigger than next competitor, right? And this is where the market intelligence data is being quoted. And that absolutely makes sense because it's just the best with the trend accuracy and the proportions accuracy.
Great. And I think we've got time for one last question. Then we've got a couple of minutes left. Marta, I feel this might be a question for you. What spend data is included in Similarweb and how is it calculated? And maybe why should John now start using this data?
Absolutely. So basically, we have a so-called PPC dollar spend. It's just a paid search spend. I cannot, share all the details how exactly we are collecting data about this, but we of course know from our data sets how people passively tracking how people are clicking into the links, which links are the paid links, which links are the organic links from the search, and having this knowledge and crossing it with other data sources, we can estimate the dollar spent here. So this is the particular metric we are speaking about. Of course, the more company needs to invest into the paid search, the less it's performing, or the less strong the brand is, the less aware people are about this particular service company. So if you're launching anything new, you're at the beginning of the journey, the brand is not already like a strong enough and built, you need a lot of these investments. When your service or your brand or the new product is already well established, this is a moment when you don't need to invest so much. Of course, it's not the same for all the businesses. For some businesses, it's just important to be at the very top all the time, especially if you're just monetizing particular things which are very seasonal, right? So that with the Black Friday sales, everybody wants to be on the top with everything that people are looking for right now, because this is the moment you want to be on the top. But when it comes to your brand in general, and whenever branding matters, this is very, very good indicator.
Fantastic. Well, I think we're out of time. I just want to say thank you very, very much to everyone who dialed in to listen. I want to say a big thank you to John for joining us on this webinar as well, and also for putting in so many good words about Similarweb and how you're using it, which I think has been very, very interesting. And then also finally, big thank you to Marta for organizing this webinar. So thank you very much, everyone.
Many thanks. Also, just like a short notice, this webinar was recorded and you will find it later, probably already tomorrow, on our website. So for anybody who didn't make it on time, don't worry. Also, we know there's been some issue with the timing because of the changing of the time zone, but I hope many of you did make it, and if not, it's being recorded.